Welcome everyone to this webinar brought to you by Bursa Malaysia and managed by our company LifeChamp. So today's our webinar is titled High Probability Trading Strategies for Catching Early Stock Trends. So how many of you here would love to catch early stock trend? If yes, type 1. Okay, if you like to catch early stock trends, you type 1 here. Okay, let us see if we are speaking to the right group of people today. Wow. Most of you here would love to catch early stock trends, because if we can catch early stock trends, then we position ourselves early to maximize our profit from a strong trend, right? So today our speaker, we invited a very heavyweight speaker from industry to share with us 2 trading strategies to enable us to catch early stock trend. So my name is Shin Chu. I'm the moderator for this session. So before we begin, just go through the disclaimer. So whatever we share on this webinar is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any companies. Everything that we mentioned here is only for case studies. Okay, so should you make any investment decisions, you're 100% responsible for all your investment risks. So allow me to introduce our speaker today, and he is none other than Mr. David Loh. So David is a trader and managing partner of Xmodeus Trading Group PLT, a consultancy firm specializing in bespoke trading strategies and coaching for private and corporate clients in the equity commodity markets. So he has 25 years of experience in the Malaysia's listed derivative industry. So before starting his own consultancy, David held leadership positions in various futures broking divisions for major investment banks. So he also served as a president of the Malaysian Futures Broker Association between 2018 and 2019. So without further ado, let me hand over a session to you, David.
Thank you, Shane. Thank you for that wonderful introduction, and I hope my audio is clear.
Yes.
Type 1. Okay, no, you type. Shane Chu say okay. So everybody's looking there. Now I'm going to share my screen. So make sure that this is the next thing I'll do. So, all right. Okay, so is everybody seeing it good as well? Shane's looking at it, and
yeah,
thumbs up
wonderful.
for that. Thank you, and good evening to everyone, and thank you for joining us on this session. Of course, a big thank you to Bursa Malaysia for hosting and sponsoring this event. Tonight, we are going to talk about high probability trading strategies for catching early stock trends. And I saw just now during the response that a lot of people want to try to see how to catch early stock trends. And that's what I'm going to do for you tonight. Okay, 2 very important things that I want to do for you tonight is some of you may be seasoned traders, I understand. Okay, some of you may be newer. Okay, so I think you will also find what do you call that in terms of the ideas that you share useful for both seasoned traders as well as for the what do you call that traders who are a bit newer in the stock markets. Okay, so what I want to share with you tonight is 2 techniques. Okay, the first is we want to talk about fractal structures. Okay, so fractal, yeah, not easy to pronounce. Fractal structures. Okay, very big word, but actually it's a very simple concept when it comes to implementation. Okay, you want to use how to recognize fractal structures and how to identify the current trend. Okay, so you want to know, of course, what is the current trend. Okay, and then we want to know when is this trend going to change. Okay, so there are signs, there are what you call that things that you look for to see whether this particular trend is coming to an end. So whether it's a time to get in on to catch an early stock trend, or if you are in the market already owning the stock, okay, whether it's time to take profit, because taking profit is also very important, right? Because both of these strategies, one is for entry, when do you enter the market, okay, and then when do you take profit. In fact, a lot of people find it quite difficult to take profits, okay, because they take take too early. Some people take too early. Some people wait until no more profits to take. Okay, so we also need to know when markets turn to the upside as well as market turns to the downside, right? So that's very important. And I'm going to share with you these timing strategies, okay, so that you're able to work in harmony with the market. Okay, so very important is we will talk about the trend and how to be in harmony with the trend. All right, so this is what we're gonna have at the end of this session. You should be able to do this. All right, so that's my job tonight. Let's move on. Okay. Okay, before we talk about the techniques, okay, we want to understand something about the markets and what are markets, okay? Basically, the gentleman you see on the screen, okay, it's a very famous guy, Bernard Baruch, okay, very legendary stock market operator in the US, of course, a financier and also advisors to American presidents, okay? So, of course, he comes from the older generations, but even during that time, okay, when he was in the market operating the US stock markets, okay, he already said in these terms, what defines the market is actually human reactions to events, okay? So in terms of looking at the market, right, looking at stock, whether the stock is performing well or there are other, external factors, whether geopolitical or the last 2 years, it has been the virus, okay? All these situations or all these news or all these events actually happen, but it is the human, reaction to these events that make the markets, okay? Because it's us, the traders, it's us, the investors, that actually put the buy and sell orders into the market, okay? So whether you are an individual trader, whether you are a large fund manager, okay, you react to this analysis, you react to these events, and based on those analysis of these events and news, okay, or even if you're trading a technical trader, those ideas that we're going to share tonight, then you actually act on the prices, okay? So in terms of looking at the market, it reflects a lot of things, okay? It reflects people's hopes, it reflects people's fears, it reflects people's strengths and weaknesses, greed, fear, ideals, okay? So the market is a whole, a melting pot of human psychology, okay? And the nice thing about human psychology is it tends to repeat itself. Human psychology or human reactions or the market behavior tends to repeat itself, all right? So what we're going to learn today is about how to read this market behavior or how to read this market psychology, all right? So in terms of crowd psychology, okay, which is when you go into the market, you will move into what we call crowd psychology. And this study by this French guy, Gustave Le Bon, okay, the crowd, a study of popular mind. It says that when a person joins the crowd, okay, so basically sometimes you think about it when you're trading and all that. No, when you're not in market, you're quite a very calm person, okay? You basically a very calm person. But once you enter the market, okay, and especially if you're trading big, right, once you get into it, you become a very different person, okay? And as Gustav says, when an individual joins the crowd, okay, of course, the market is another example. Of course, you can join a big party, or you can, of course, join groups to lobby certain agendas or causes, all right? But when you join it, you cease to be an individual, okay? You basically lose yourself and sometimes can be like a robot, okay? And you cease to be guided by your own will and you tend to accept ideas superficially, right? So if you see that reflecting in yourself when you're in the market, okay? So don't be worried, because that's part of how human beings react when you're in a crowd, right? So now the thing is, if you want to win in the market and you want to perform better than the rest of the market, then of course you need to act differently, right? Yeah, you must have some basis of acting and making entries and exits into the markets, all right? So basically, in terms of crowds reacting in terms of the market, what do crowds typically do best? Okay, and I've done this myself, okay, trading in the markets, in the stock markets, okay. My career started trading in the markets when during 1993, right? So there was a time, of course you can guess my age by then, you know, I started in 93 and then traded the Malaysian bull market at that time, right? So, and what do crowds typically do best? And I've done this myself, right? So two things, okay. The first is this. Crowds always buy market tops, okay? And I bought market tops before, okay? I don't know whether you've done that as well. You bought at the highest price, okay? That's quite common, okay? At that time when I first went in the market, I was newbie lah, you know. I don't know charts, you know. Basically, listen to rumors to trade, you know. Sometimes, you know, your gang. Last time not so easy to get so much rumors actually, right? Nowadays with the social media, you get a lot of this different types of views in the markets, right? A lot of them are rumors, some of them are fake news. Okay, so you tend, if you base your trading on those types of signals or those types of information, then you probably end up like a lot of people, you end up buying the market tops, right? The other thing that crowds normally do in the stock market is they sell market bottoms, which I've done as well, right? So you know, you hold a particular stock, and then you're supposed to cut loss, or it's not performing well. You continue to hold it, right? You wanted to trade it for next couple of days, and ended up holding it for the next couple of years, right? So and the end, when you're so frustrated, you sell your stocks, and that probably be the bottoms, right? So that's what crowds typically do. So we need to differentiate ourselves, right? We need to be better informed. And that's why this program with Bursa Malaysia is to get you better informed and give you better tools to enable you to invest and trade better, right? Okay, let's move on. Let's talk about the trend. Okay, if there's any friend in the market, okay, and there are very few friends in the market, there's any friend in the market, it's the trend. Okay, so traders need to be able to know how to latch on to profitable trends, because profitable trading is basically you are able to trade with the market, right? So when the market goes into what we call a consolidation or congestion, that basically doesn't move anywhere, right? Then you find that a lot of traders actually suffer losses during those periods, right? So the key questions is this: how do you determine the trend direction? Okay, the second one is the strength. Okay, so you see the trend, but how much strength has it got left? Okay, is it the start of the trend? Okay, if it's the start of the trend, of course you will, if you caught it, then it's very good. But when does the strength wane? When does the strength actually become weakened? Right. So what are the signs? How to know that? Okay, tonight we'll find out. How to recognize also non-trending markets. Okay, so non-trending markets you want to avoid. Okay, so stocks that are in non-trending, what do you call that? Trends or sideways trends, then you want to avoid putting your money into those stocks, right? Because money and time. Okay, so if you spend your capital sitting there and not making a return, then that's also not good. Right. So we also want to find out when to stay in and when to stay out. Okay. So that's the three things about trends that we want to know. Okay, so in terms of talking about pattern, a fractal market structure, okay, the way to recognize a fractal market structure, okay, this is a very scientific word, okay, but the thing is to implement it is actually not that difficult, okay, because the human mind is also a fractal organized, what do you call that, organ, okay, so how we think is also a fractal organization, okay, so our brain is fractally organized, right? So in terms of fractal market structures, the very initial people who came up with it was actually this guy. I don't know whether some of you may have heard of Elliott Wave. Okay, some of you in technicals would have heard of the Elliott Wave. Okay, so Elliott Wave was a very early start in terms of looking at the markets. Okay, so this guy Ralph Nelson Elliott. Okay, and he's the father of the Elliott Wave. Okay, and during that time in the 1930s, he published a work, okay, called the Wave Principle. Okay, and he showed during that time that the markets actually, although it looks very chaotic, very disorderly, okay, it actually has a very repetitive and wave-like pattern. Okay, and in that time, of course, after he passed away, this theory was assigned his name, called the Elliott Wave theory, right? So this is one of the very first work that showed that markets, especially the stock market, because Ralph Nelson Elliott actually studied deeply 75 years of US stock market data, okay, before, and observe how this data and how these actually prices prices move, right? So in that sense, he found this very cyclical nature of the market, and he attached that cyclical nature to trader psychology, which we spoke about, right? So it identifies, using the Elliott Wave, you can identify trends when the market reverses, okay, and how is the cycle like in terms of the price movement. Okay, basically, Elliott in his theory stated that the stock market prices to the uninitiated may look very random, very unpredictable, chaotic. Okay, later you saw this word in my second bullet point, modern chaos theory. At that time in the 1930s, it looks chaotic and unpredictable, but they are actually can be predictable. There are natural laws behind it, and this can be measured and this can be forecast. Okay, so I will share with you this what you call that, how to identify that. Okay, so later when it moved to modern chaos theory, okay, in the 1980s, okay, basically the science of chaos theory came about, and then you have things like chaotic equations, and that's where the scientists at that time, okay, and those who actually apply into the stock market, okay, found that in terms of the market movements, okay, actually has a very high order of degree of order, just like in nature, right? So markets actually exhibit fractals, okay, and because the mind, the human mind or the human brain is actually a fractal organization. All right. So what we'll be doing tonight, we'll be using the tools offered by Elliott and also modern chaos theory. Right. Okay. So now I'm flashing you in front of you this particular picture, okay, on the right side of the screen, okay, and that is a, what do you call that, a chart, okay. So now for those of you who look at this chart, okay, immediately I think in less than 2 seconds you'll be able to recognize that this is a bull trend, okay. It means that these are prices on an uptrend, okay. And how do you recognize it so quickly? Okay, it is because, as we say, your mind recognizes patterns. Okay, your mind is a pattern recognition machine, right? It looks at this because it's learned it. You've learned it, okay, since young. You've seen these patterns everywhere in nature, and the look of this particular line, you look at it immediately, you can recognize it is a uptrend or a bull trend or a bullish trend, right? And if you want to describe a bullish trend, it's basically a trend characterizes by the ascending highs and also ascending lows, okay? So you have what we call the higher highs and the higher lows, right? So this is an uptrend, okay? Now I'm going to flash you another slide. What trend is this? Okay, immediately less than 2 seconds, you can also tell that this is a downtrend. Right? Again, your brain is working perfectly, okay, if you see a downtrend. Okay, if you don't see a downtrend, then never mind, you can text me and check why your brain's not seeing a downtrend. Okay, so lower highs and lower lows, right? So to describe a downtrend is, of course, lower highs. The highs are getting lower, descending highs, and the lows are getting lower as well. All right, this is a bearish trend. So immediately you can see it. Okay, the secret is not here. The secret is how to see the reversal, okay, which is a lot of people cannot see it, okay. You will see it in the next couple of slides. Okay, so sideways trend, we spoke about it, okay. Of course, sideways trends are trends where you have the markets moving in a very well-defined range. There's a very well-defined high, and there's a very well-defined floor as well, okay. So in terms of trading, for traders who trade trends, of course, this is not very favorable to them because it's very difficult for them to make money, okay. They buy a breakout, it comes back down to a low, they sell the market, it goes back up. So it's the problem with this kind of markets is it's basically you want to stay out, okay. But staying out doesn't mean that you don't want to watch your particular stock. If you have a favorite stock in this kind of trend, you want to watch. Why do you want to watch? Okay, although you are not trading it, you want to see when is the breakout. Okay, then that's very important. Later we'll see how to trade a breakout. You want to see the point it breaks out, because the longer it stays in this consolidation trend, the moment it breaks out, the trend will be very, very powerful. Okay, so the thing about looking at the sideways trend, although you may not want to actively trade that trend, you want to stay focused, and you want to once a while or regularly check that particular favorite stock of yours to make sure that's not broken out, because once it's broken out, it's a golden opportunity as well, right? So that's one thing I want to say about the market in consolidation. Okay, but generally in terms of trading, the traders will lose money in this kind of trend. All right, so we've seen three different types of trends, okay? And there's only three, okay? The market moving up and moving down or moving sideways. Now, the key question is how to recognize the market turn, all right? And this is what we want to do, and everybody said, I want to learn that, right? So when the market is on the downside, okay, when is it turning so that I can buy? Or when the market is moving up and I'm holding a very nice position in stocks, when do I take profit? Okay, when is the time that it will turn? Okay, so we will learn in the next couple of slides. Okay, so stay tuned here. Decoding the market turn now from a reversal of an uptrend. Okay, that means now you are in a position. Let's say, for example, put yourself in this situation. You are holding a very nice stock. Okay, and 2 years ago in year 2020, a lot of people were holding some nice trends in glove stocks. Okay, so now they are making some really nice profits on the glove sector, right? Now, when does the glove sector turn? Can you recognize it? Not. Okay, does it give you the sign? Not. Okay, so this is the sign that you need to burn into your mind. Okay, so let me explain. Okay, so on the left side of, you see this high here on the left side. Okay, let me see whether I can have some drawing tools. Okay, so that easier for me to draw. Okay. On this left side, okay, of course, this is uptrend, right? Just now you can see immediately less than 2 seconds, you can recognize the uptrend, okay? And on this side, this is the downtrend, okay, as you recognize just now. Now, this is the turning, okay? And let me sing to you that song of the turning, okay? So the song for the bulls are higher high, higher lows, higher highs, higher lows, higher highs, higher lows. Hey, then the bull song stops because no more higher high, no more, as the some of the Chinese will say, no more this song to sing. No more higher high to sing. Then it goes in and break this low. Okay, when it breaks this low, it creates a new low. Okay, so when you have a new low and a lower low and lower high, what song is this? This is the song of the bear. Okay, so this is the turning point. Okay, so this needs to be burned into the head. Okay, into your mind. Okay, because this is where the turning point is. Okay, and later we'll go into a bit more finer detail to see the fractal structure of this turning. All right. Okay, so let me clear this. Clear all drawings. Okay, and move on. Okay, close this. Okay, so in terms of looking at trading, this is where you take your profit. Okay, so let's say, for example, you're on a nice trend on the stock. Okay, so you every time it comes down, you buy a tip. Wow, fantastic! It goes up again, comes down, you buy. Oh, good price, buy again. Goes up, come down again, buy. Okay, but this time, this one time, last time, okay, it doesn't make a new high. So every time you see the market that refuses to make high in terms of a trend, uptrend, then you need to be very, very focused on what was the previous low. Okay, it made with, okay, so it made a new high, come down, make a low. These particular prices can't seem to break this high. Okay, and then it comes in and breaks this low. Okay, this is a time where the market is telling you, okay, I'm going to change trend. Okay, so if you recognize it, fantastic. If not, then I'm moving down anyway. Okay, whether you recognize it or not. Okay, so it breaks this and it's time. It's basically telling you I'm going on a downtrend. Okay, so this time is where the traders on the long side or on the buy side of this market will take their profits and then either wait for the next trend to turn. Okay, of course, if you are in any particular instrument that you can short, of course, if you like, say, for example, in the index, you can short the index futures, you can go ahead and sell as well. All right, so initiate a short position if you're in the indices, or you take your profits, you lock in your profits. Okay, so this is how it looks like. So this is a very important point to burn into the mind. All right, so now we look at this. How do we recognize the market has turned? Okay, so markets have come down. So a particular stock may have come down. Okay, and then when is that reversal? Okay, so the same thing again. Okay, what is the bear song? The bear song is a lower high, lower low, lower high, lower low, lower high, lower low, lower high, and no more lower low to this song. No more lower low. Okay, so when there's no more lower low, that's the song may start to change. The music may start to change already, and if it does break this particular high, then you will recognize it as a turning point, and you will actually now proceed to make an entry into the market, right? So in terms of looking at this, is how you, okay? So if you are able to short the market, you can do this, but then, okay, if you're looking for a market that's turning down and now which is the time for it to enter, to go up, then you look for this stop and reverse signal, which is over here, right at this line over here, right? So prices do not make new lows, but then breaks the recent high, okay? That's where you will go in and enter the market. In terms of the market, this is where the signal comes in, okay? So we will go in and look at some examples, right? Okay. So this is example, hibiscus. So this, of course, there are multiple turning points here. I'm just basically highlighting with a circle some of those turning points on the downside and some of the turning points on the upside, right? So hibiscus was actually, you look at this particular chart, okay, it's been trading in 2021. It's quite an active stock in terms of the trends, right? So if you have caught an early trend in September of last year, okay, you would have made a move right here between September to the third week of October, and then in early November it showed this particular sign to take profit, okay, in terms of the charts, okay. And then in terms of the reversal signal here again, right, in the last week of December, there was this trigger, okay, and this is where you would have entered for the new trend as well, okay. So this particular price around the 78, 79 levels, okay, and then it did move quite impressively up to the 135 levels right here, okay, and then it came down quite drastically, okay. You can see the waves here. So this is one example, okay. Let me show you another example. Okay, so this is GeneTech, okay. So you have here, okay, if you have ridden this particular stock to these heights, okay, there is the signal over here that you can lock in some profits, and right here as well, okay, after locking some profits, you were looking at an opportunity to enter again this particular stock. If it was one of your favorite stocks, then you have displayed this particular signal here as well. Okay, don't worry, I'm going to go into more detail on how to look at this particular one, but you need to look at these charts to, what you can do is you go on to the internet, okay, you display this chart. If you have a charting software provided by a broker, fantastic, all right? So you go in and look at, you can display a line chart and then see how this wave move like, okay? You train your eye to see this wave movement, all right? Okay, let me show you another example. Okay, of course, this top glove, okay. Top glove, of course, in terms of looking at the trends, you can see, of course, Middle East still on the downtrend. It did a quick, what they call that, a rebound over here, a technical rebound, okay. But recently also, you've seen that it has come down as well, right? Later, we go in and see some live charts. I will show you some live charts later. We can go in and analyze some charts together. You can have some of your favorite counters ready, and you can go in and analyze them as well, right, during the Q&A session. Okay, and last one, this is an example of a chart snapshot of Coastal, right? You could see all the turning points. I've only highlighted a certain turning points, but here you could see the taking profit, okay? And now here also you can see how it moves up, okay? And here also you can see the signs of how you can re-enter the market. So they are, if you can recognize these turning points, okay, and you will have a very powerful tool, and you could actually see that you didn't need to calculate anything. You're actually using the pattern recognition ability of your brain and your eyes to recognize these patterns, all right? Okay, if you have any questions, put into the Q&A chat box and we will handle it after the presentation. Okay, so now what you're seeing here is fractals. Okay, just now we talked about fractal recognition. Okay, and in the 1980s, Dr. Bill Williams, okay, he's one of those very good traders and my sort of my guru, right? So Dr. Bill Williams, he was very interested in chaos, the theory of chaos and the markets as a natural phenomena. So he did a lot of research, and that time even computers with the large IBM mainframes, right? He wanted to find what is the code of the market. Okay, what is the DNA code of the market, right? So he applied a lot of computer programs and a lot of what do you call that analysis using big mainframe computers, okay, to see what are this indicator, the DNA, and he found the DNA which he called the fractal. Okay, so what are fractals? In very simple terms, fractals are basically repeating patterns. Okay, repeating patterns that happen in different scales. Okay, let's say for example you see a particular market in this particular time frame. Let's say for example you're looking at daily chart, okay, and then it exhibits the fractals or the patterns that you saw just now. If you dive into the hourly chart, you also see the same patterns. You dive into the 15-minute charts, you also see the patterns, the same similar patterns. You dive into 5 minutes, same. You dive into 1 minute, same. You dive into even the 1 second chart or the tick chart, also you see the patterns. Okay, so if you have a thing that have repeated patterns in different scales, then these are called fractals. Okay, and these are actually the laws of the market. Okay, so why is it called high probability? Because this is the law of the market, right? So just like the law of gravity, is definitely high probability that if you jump off elevation of a high elevation, you will fall. Okay, you will fall to the ground, okay, and hopefully you survive. But that's high probability because that's gravity. It's the law of nature, right? So in terms of looking at the markets, okay, the law of the market is the fractals, because that is the structure of the market, right? So what you want to recognize, and what you saw in the last couple of slides already, an introduction to the structure of the markets. Okay, so now Bill Williams actually able to formulate it, and this is the structure. Okay, what you see on the right side here, this is the structure. Okay, these are the price bars. Okay, price bars. Okay, and these two arrows, this arrow here and this bottom arrow here, these are called fractals. These particular formations are fractals, and a fractal is basically defined, which basically, okay, having two bars preceding and following high or low. Okay, a very simple way to look at fractals is just put out your hands in front of you. Okay, so if you put up the hands in front of you, okay, I'm going to put up my hands in front of you. You can see in the sidebar, right? If you see me there, so my highest finger is the fractal. Okay, so I have two bars on your right and two bars on the left, and those are the bars with. So if you put your hands in front of you, that's the up fractal. If you turn it down, that's the middle figure is your down fractal. Okay, so this is down fractal. So this is like your 5 fingers turning down, and these are your 5 fingers turning up. Okay, so are the fractals, right? So very wonderful, right? So you just need to recognize that. Right, so let's move on. Okay, here are some other examples of different fractals. Okay, you can see over here. Okay, this is a fractal, so there are 5 bars. It can be more than 5 bars, okay, but minimum 5 bars, right? So this here, there's more than 5 bars. There's 6 bars. Okay, this is up, this is bottom. Okay, so the combination of bars can also give you up and down fractals. Okay, here is a fractal. Bottom is also a what do you call that? A down fractal. Okay, and here is the up fractal, right? It's a pattern that you will see repeating itself in any time span. Okay, that's why it's the law of the markets. Okay, so but the condition, remember, the middle bar must have a higher high or a lower low, followed by at least 2 on the left and right. Okay, so that's the description of what a fractal is. Okay, so yes, you may need to practice. Last time when I learned this method, I had to practice because I have no charts to show. But the wonderful thing is these days, you can display these fractals, because fractals is one of those popular indicators that you can find in the technical or charting platform. So you go down and look for Williams fractals, okay? And it will be displayed very conveniently for you. Okay, so this is my chart, okay? And this chart, you can see, this is a chart of Dagon Exchange. Okay, and you can see all these arrowheads. Okay, it's automatically what you call that displayed for you. Okay, and these are the higher high and higher lows that we're talking about. Okay, so if you connect, if you use your okay, let me see, let me connect for you, let me draw for you. Okay, if you connect it, okay, if let's say for example, if I connect this, okay, pardon my lousy drawing. Okay, you connect all these arrowheads. Okay, then you will find that wave that we talked about just now. Okay, okay. So whether it breaks the high, okay, breaks the high, and you go in, enter the market, or you take profit when it breaks the low, Okay, it's all shown in the fractals. All right, so that is fractals for you, and we will go in and look at fractals. I'll give you a lot of examples so that it's clear for you. Clear all. Okay, so let's go in and look at some examples. Okay, how to trade. Okay, how to use fractals. Okay, so fractals entry and exit system is a way to very easy to identify. Okay, so if you're used to looking at fractals, immediately in less than 10 seconds, you can recognize the trend. You can also recognize when is the impending turning point. Okay, to the exact price. Okay, to the exact price. Okay, of course, if you can show a fractal display, it's better, but you don't need any sophisticated technical analysis software. You just need to be able to see the chart. Okay, it's easy to master, but you need some effort. Okay, I'm telling you, it takes at least 2 weeks of dedicated effort in basically training your eyes to see and training your brain to recognize it. Okay, so when you know this, you'll be trading with the trend, and we're talking about the trend is your friend. The most important friend in the market is the trend, so you will be trading with the trend. Okay, and you will be able to catch early reversals as well. Okay, this is one thing we want to do. Okay, of course, can be applied to all markets. Okay, and all time frames as well. So if you are a short-term trader, okay, if let's say for example you start with a position trader, okay, or even an investor, right? So an investor will look at charts, probably looking at daily charts or weekly charts. Okay, so you display weekly or daily charts. Now, if you're a short-term trader, okay, you trade maybe within the week, only a couple of days, you hold position for a couple of days, then you look for hourly charts. You look for the signs or the patterns in the hourly charts. And if you are a day trader, or you trade today, go in, see an opportunity, see an interesting stock, look at the patterns, put your entry in. At the end of the day, you get out. So you can also use 5-minute charts or 15-minute charts. Okay, and every single time frame, there's always the fractals. Okay, that's the wonderful thing about it. All right, so let's move on. How do we trade this fractal? Okay, how is the setup if you want to go into enter a market to buy? Okay, this is how it looks like. Okay, so markets are on the downtrend. So again, you see the fractal here. The B is the fractal. Okay, and when it breaks the fractal right over here, it's where you go in and signal you to enter the market on the long side, okay, on the buy side. So if it breaks the, let's say for example, B is say 2 ringgit, okay, this particular stock is 2 ringgit. If it moves and trades 210 or 205 or 220, yeah, already shown you that it's broken this level, okay. This is a fractal, okay, so this must be a fractal, remember, okay, this one must be a fractal. Let me draw it for you. Okay, this is the up fractal. Okay, so when it breaks this particular line, okay, so if this is RM, this B, yeah, if B is RM2, and if it trades above RM2, okay, then you have a setup on the buy. Okay, so of course you can choose to act on this signal when it tells you that it's going to change direction. Okay, so basically, if you look at this, is what we studied just now, right? So markets are on a lower low, lower high, then make one high, does not break a low, right? It does not break A. A is it was the low. So this low, C low, did not break the A low, right? So after that went up to break the B high. Okay, so that's the fundamentals we saw just now in the beginning when we look at the reversal points. Okay, so that's how a buy signal is triggered. Okay, later we'll see some examples. Okay, how about a profit taking? Okay, how does it look like when the market is going to turn down and you want to take profit? Okay, you want to sell and take profit. Okay, so markets are going up. Okay, you're already nicely riding a trend, and then it gives you this ABC signal again. And B is a fractal. Again, it's a fractal. Okay, so annotate. This is a fractal. This is a down fractal. Okay, so it breaks this price. Let's say, for example, is 150. Okay, 150. And if it trades, say 145, it breaks through to 145, then it's basically telling you that the market is going to go on a downtrend. Okay, so it's time for you to take some profits. Okay, so all you need to burn into your mind is these 2 particular slides just now that you saw. Okay, and this one, I think the video will be available for you to review as well. So if you want to review the video later, there is of course a recording for you to review. All right, so that's how it looks like, and we will go in and look at some examples. Okay, so let's look at this example. Okay, so this signals case study. Okay, of course, Top Glove is a very fantastic case study to look at. Okay, this is a snapshot of this stock and from January to February of 2020, and you can see the different buy and sell signals. Okay, which I've marked here in the screen. These are all the buy and sell signals in terms of the fractals. You can see. Okay, so markets here and low. In fact, here there is already here. If I can show you. Here, right here is already triggered. Okay, okay, so it triggered right over here, but came back down. Okay, so it trigger again right here. Okay, you see this price 462. Okay, so it breaks above 462. It's another trend. You see, in terms of looking at the trend, there are multiple signals as it goes up. Okay, so when it comes down, it breaks a high again. It's another trigger, another at 483. Okay, and then right at the top in February of 2020, there was a setup. Okay, there was a setup. So basically, when you are right here in this time, okay, basically you've seen the price, you've seen the 560 price, and you know the 560 is a fractal because either you recognize it by the eye or it will have shown you. Okay, it will have shown you that the 560 is where if it does not go and break the high and it comes down to break this, it's time to lock in some profits in terms of looking at the charts. Okay, so it did that. Okay, of course, then after it broke down, it went to 512.5 and then started to move again. Okay, so we'll move on and look at the charts as it continue on to this, analyze this particular stock. Okay, so the next one. Okay, this is from February to April, so we're continuing. Okay, so it's coming down, and then in end of February, there's this trigger. Okay, there's this price level, it's 578 already. Its prices are moving up. Okay, 578, and you can see it come back down. Of course, this is the heavy day. This was those of you who were trading this particular stock at the time. This was the time that they were reviewing the credit or the financing of this particular stock. So there was this huge, there was some cleaning over here or some management of that credit, and there was a huge drop. Okay, and then it started to trend again, right? So 627, again, you can see multiple buy signals. Even here, if you look at this, if I mark down for you, I didn't draw everything, but if you mark down for you, you'll see that there are signals here as well, triggered over here. Okay, there were signals here again, triggered over here. So there are multiple times you can enter. Of course, later you ask me the question, what will be the earliest? Okay, later you will see what will probably be the earliest signal you can take. Okay, but there are multiple opportunities for you to enter the market. Okay, of course, as you enter higher, okay, so you will find that you will be nearer to the top. Of course, you know, at one time or another, the markets will correct. Okay, so let's move on again. We will see more examples so that it's clear to you. Okay, so now April to June. Okay, so we're still at $6 something, right? So of course here there is a buy signal. Okay, there's a buy signal at 627, and then okay, so the rest is history lah. You all understand, right? And then there was a profit taking at 15 right here, which was recognized. This is a fractal. You can see the arrowhead here, and when it moved down, okay, the market's basically signaling to you that you should be locking in some profits, all right? Okay, so that's let's have a look at another stock. This is Genting Malaysia signal case study from August to November of 2021. You can see various buy signals. This is August of 2021. There was a buy signal at 284. Markets went up to about 319. Okay, then started to consolidate. So here is a bit difficult because it's going sideways, right? And basically here, over here, there's a technical take profit, although the markets actually came back and gave you an opportunity to re-enter the market at 310. Okay, so you probably, if you are strictly following this system, then at 301, you have locked in some profit, re-entered at 310 and above, and then markets went up to 333 and now take profit, depending on your how strict you follow the system, right? You may have some other rules to profit take as well. Okay, so in terms of some will ask, where do you put stop losses? Okay, if you ask this question about putting stop losses, then you're a very good trader. Okay, because you enter a market, you know where you want to put your stop losses. That means if it goes below a certain point, you may want to reconsider and review your position. Okay, so where do you put your stop losses? Let's say, for example, you entered the market on B+1, okay, right over here. So the points, the technical points to put where your stops are, basically these are where you put your airbags. Okay, your airbags are at C and A. Okay, if it trades below either C or A, okay, then that's where your airbag is. Why do you put C or A? Because the moment it goes up and breaks, say, for example, A, which is the last extreme low, okay, it's basically saying that the market is going to make new lows again. A market making new lows is a downtrend. So you do want to be inside the market with a position in the market when the markets are going down. Okay, so the stop losses are A or C, depending on your risk. Some people can take the A risk. That means they can take the price between A to B, right? But some people may not be able to take that much risk, right? So it depends on the stock and depends on the movement, right? So some may be more palatable for them to take the difference between C and B as their risk they want to take. All right. So in terms of looking at putting stop loss, that's where we are. Okay. So that basically is the fractal pattern recognition tool that I want to share with you. Okay. Now we're going to move into another tool. Okay. Quickly move into that so we can also take a Q&A later. Okay. So how to master this? Basically, you have to train your eyes, because this is pattern recognition. Okay, or you can use the fractal indicator in your platform or in your charting tool. But still, you have to train your eyes. Okay, yeah. And this is actually my wife wanted to learn this as well, so I drew this on her mirror. Okay, so every time she brush her, this is a snapshot of my toilet. Actually, my toilet. Excuse me. Right. So you can see the high lows. So my wife also want to learn. Okay. So she retired from teaching, and now she's trading. I taught her how to trade. Okay, so practice, very important, right? The pattern recognition needs to be embedded in your mind. Okay, and once you have it, you will be able to see a trend very quickly because your eyes can see it already, right? So this is very important. If you spend 2 weeks in the next 2 weeks looking at charts and basically training your eyes to see it, you will have it forever. Okay, that's my promise. So let's go to the next tool. Okay, fishing for bottom. That's everybody's favorite, right? The art of finding bottom. Okay, how to find and trade what we call look for bottoms. Okay, bottom fishing. Okay, this is like deep sea, right? So this is the what do you call that? The thing I want to share with you. Okay, and it's momentum. Okay, the key to finding a bottom or finding a top is momentum. Why? Okay, so in terms of looking at momentum, let's look a bit on physics. Yeah, let's get a bit scientific. So if this is a pendulum, okay, so all you recognize pendulum, right? Okay, so when you swing a pendulum, okay, moves left and right, goes up and comes down, right? Now at the extreme ends, okay, of the movement, you will find that before it changes direction, okay, it will slow down. The pendulum will slow down at the peak before it changes and accelerates to the opposite direction. Okay, so in terms of markets as well, if you understand the physics of markets, which is very similar to nature, price is the last thing to change in markets. Okay, let's say, for example, over here, imagine this is market going up. Okay, this pendulum going up and prices going up, right? So as the market goes up and up and up, it's going higher. So in your eyes, if you don't know momentum, you say, oh, market is continuing to go up higher and higher. Yeah, but as it's moving up, you'll see that it's slowing down. Okay, slowing down. The momentum is slowing down. Okay, you need to be able to recognize that. Okay, so in terms of looking at the various things that change first, the first thing that changes is trader decision. Okay, so we said already, it's a trader's decision to act on the market that makes the market change. Okay, so the traders will make decisions. Okay, so let's say, for example, the market is going up, and then people feel that, hey, market needs to take some profit already. Some more wiser traders like you who can recognize the turning point may go in and sell already, right? So as you make these decisions, it will impact the market. Volumes will increase, the speed of momentum will increase, momentum will change, and then only price will change. So price is always the last thing usually to change in the markets. Okay, so being able to recognize momentum early is very important. Okay, so before a price trend change, the momentum must change, right? Just like you drive your car around a corner, so you don't accelerate and keep accelerating in the corner. You have to slow down and change direction, right? Before you accelerate into the new direction. very similar to the markets as well. So how do we measure momentum? Okay, use this. I recommend you to use this. Okay, it's called the Awesome Oscillator. Again, B. Williams, my guru, okay, he invented this indicator, and it's available, again, beautiful, free in a lot of charting software. Okay, so Awesome Oscillator, you just have to display it. Later, I'll show you how it's look like. Okay, basically, what is an AO? The AO, or Awesome Oscillator, is one that measures the momentum in the past 5, say, days, and compares it with the last 34 days. How does this momentum look like? Okay, so it's basically, if you know how it's charted, then this is how it looks like, but you don't need to know that. Okay, these are for technical guys who want to know how to this calculate, because basically the high and low divided by 2 subtracted I won't spend too much time. You can read that later. Okay, but basically put on your AO, or even put on your 534.5 MACD. Okay, you can ask me later if you want to know how to use the 534.5 MACD. Okay, and what the AO does for you is the AO tells you exactly what is happening in the current momentum. Okay, and how to use that. Let's see. Okay, so let's display this. This is how you display. This is our KLCI chart. Okay, this is our KL Composite Index chart, and you can see at the bottom panel, this is the AO. Okay, you can see the histogram. The green bars are basically saying that this histogram is going positive, and if the red bar, this is the AO, or the momentum, going negative. Okay, so how do we use this? We want to use this principle called momentum divergences. Okay, so this is the shape of the momentum divergences. So what is a momentum divergence? Let me explain to you. Okay, divergence happen when the price move opposite of the momentum. Okay, what does that mean? Okay, look at this picture over here. The prices are going down, but the momentum is going up. Okay, so it's moving 2 different and opposite directions. Okay, so this is where you are saying you are slowing down to change, you're turning, you're stepping on the brakes, and you're steering it into a different direction already, right? So the momentum, basically here, the market is stepping on its brakes already. Although it's still moving downwards, the market is stepping on its brakes already. It's going to turn its steering already. Okay, so divergences forecast a potential change in trend. Okay, whether from upside to down or from downside to up. Okay, so in terms of a bullish divergence, which is this that you see over here, is basically you have weakening price. Okay, prices are still coming down, but you have strengthening momentum, which is on the opposite side. Very interesting, right? Okay, the bearish divergence is on the opposite. Of course, you have strengthening prices, but weakening momentum, right? So that's going to be interesting. Let's see some examples. Okay, so this is what? This is a stock. This is Maxis per heart. This is a snapshot of Maxis per heart. Okay, so here you have bullish divergences. You see, markets prices are coming down, but momentum is shaped upwards. Okay, and then the market rebounded. Okay, rebounded nicely. And right here again, when it formed this, prices are going up, new high. Okay, but hey, momentum is going down. Okay, so it's basically telling you, hello, maybe it's time for you to take some profit because I'm losing momentum. I'm stepping on my brakes. I could be turning my steering very soon. Okay, and over here you can see also a fractal. If you combine with the fractal, right over here you have a take profit or sell signal right over here. Then let me draw it for you right over here. Right. So when broke this, now this price was something like 480 or 483. Okay, the markets came down after that. Right. So that's how you use divergences. Okay, so let me clear this. Okay, give you another example. This is what? Signal case study for CIMB. All right. Again, you see markets a huge drop off over here, right? Right in, of course, this is the beginning of March. Okay, this is where the COVID scare started. Okay, so markets came down huge. Okay, and then continue to move down. But you can see here that the AO is showing you upwards. Okay, so the divergences, right? Momentum is going up, prices are going down, and then from there the market rebounded. Right, that's another case study. Let's move down again. Let's look at the bullish divergences on Genting. Okay, so you can see over here, right here as well. This is a snapshot from 2019. This is a weekly chart, like a longer term chart, right? Right over here, you can see the divergences, right? So momentum's going up and prices are going down. Okay, so when that signal comes in, then you need to be alert. There's a possibility of a market reversing. Again, you go in and look at your fractals, and if it triggers a fractal like right here. Okay, some of you, I see it because I've seen for so many years already. Of course, right over here, this particular line, okay, is a fractal. Okay, right here is a fractal. Then you have an opportunity to buy. Okay, so this is a weekly chart. So of course, the progression of the prices are slower. All right. Okay, so I hope you guys are getting an idea of how to use this, right? So given another example right here, same thing. Okay, so this is my EG. There you have a bullish divergence. Okay, so you basically caught a very nice trend if you're able to recognize it right over here, right? And this time was in June and November of last year. So this is very recent, right? Okay, so if you're able to see this, okay, it's going to be wonderful, right? And over here as well, you can see here, if your eyes are astute, you can see momentum going up here, but momentum going down here. So here is a take profit signal. Okay, just let me draw so that it can be a bit clearer for you. Okay, you see prices moving up, you see momentum going down. Okay, so this is what we call bearish divergence. So when you have a bearish divergence, you want to hunt for looking for this particular fractal. You see this fractal here, broken over here at 101. So markets came down, right? So yeah, let's see where we are. So I basically shared with you these two techniques. Okay, this is okay. This is top glove again. Okay, what period? This is from August and November of 2020, right? There's this bearish divergence. So basically saying that the market may pause. It may be time for you to look for signals to take profit, right? Then, okay, so basically we've shared the two things. I want to go into live chart setups now, okay, and also in Q&A, right? Because it's a time now that you can ask questions. I see some questions up there already, but let me go to a live chart. Okay, of course, markets are not trading. I'm going to show you my charts. Okay, so let me give a new share, right? Let's see, where is my new charts? Okay, no, sorry. Okay, let me share again. Just hold on a second. Here. Okay, I hope everybody can see this chart. Okay, let it load for a while. Okay, if you have any requests to together analyze a particular counter stock, let me know. Okay, so let's look at this. See whether anything we can learn from this particular chart. This is a daily chart of GeneTech. Okay, so at least we can see the latest charts, right over here. Let me just reset this chart. Okay, so let's look at this GeneTech. Okay, anything interesting? Let me, okay, now you see I'm going to display the fractal. Okay, and you see it's immediately displays the fractal for me, right? So in terms of looking at the fractal now, the latest fractal is gone into a profit-taking mode. If you have bought anything in March, okay, it's probably time to take some profit. Okay, because why? Why take profit? Okay, because there is a what do you call that? There is a profit-taking or a sell signal setup over here. Okay, let me take this horizontal ring. Okay, and this is where it is. Okay, this is the price 245. Okay, so it broke below this, so it's basically saying that it's time to lock in some profits in terms of the fractal positions. Okay, so this is a daily chart. Let me show you a weekly chart. Okay, so we go long term. Let's say if you are an investor, you invest hold for longer term. Let's go on a weekly chart and see anything interesting, right? So if you are looking at a weekly chart, you would be able to recognize, okay, in terms of looking at this particular counter has triggered a a buy signal right over at this price, and it was triggered on the 21st of June, year 2021. Right. Of course, if you're looking at the long-term chart, you have got it at an extremely favorable price, of course, right? So this is where the price, if you're looking at the analysis of the chart. Okay. So would you have taken some profits, perhaps? Okay. So if you just follow the weekly chart and trade that weekly chart trend, then you would probably, there is a signal right over here, and the signal is right at this particular price point. Okay. So where it broke down at 270, right? So it broke down over here, right? And the high at the time, it peaked at 384.5, okay, and came down. This was signal, okay. So you may use a certain combinations of maybe a shorter term daily chart to take profits, depends, okay. But in terms of longer term charts, when you see this breakout, that means a very longer term trend is going to develop. Okay, so you can see from different angles. Okay, if I go into, let's say, for example, a hourly chart. Okay, so those of you who are trading hourly charts are basically trading the trends over the next 3 to 4 days. Okay, so if we look at this particular hourly chart, where are the opportunities? Okay, so we have opportunities in terms of the fractals right over here, right? You have one signal that was triggered right over here. Okay, and then consecutively another trigger right over here. Okay. Okay, so you can see that in terms of multiple entries that you can actually go in, right? Even over here, there's an entry, right? There's a break. Okay, and in next 1-2 days, you will have some profits already. Right, so it depends on your trading strategy. Are you a shorter term, you trade a couple of days, or are you a longer term, you trade for, you maybe hold for a couple of months, right? So it depends. So when you do that, then you will have to change your time frames in terms of looking at the patterns, right? So I'm going to take questions now. Back to you, Shane, but I'll be on this charting screen.
Sure. Shane? Yeah, thank you so much, David. There are many requests for you to look at different stocks.
Okay.
Yeah, King Leng will ask you, could you look at Leon FB?
Leon FB. Wow. Okay. There's so many stocks.
Is there any reversal of downtrend?
Okay, let's study Leon FB. Okay, I'm adding it here. Okay, and I'm displaying Leon FB. Okay, so this is hourly chart. Let's look at daily chart first. Normally you start with daily chart. Okay, so, let me bring it forward. Okay, so you have to ask yourself when you analyze this chart. Okay, so immediately, okay, if I just put a line here, what trend is this? Okay, and this, let me show you this one, this distracting. Okay, what trend is this? Okay, currently, if you're immediately looking at a trend, of course, you're saying, hey, this is a sideways trend, right? Because you have quite a well-defined highs and lows, which is basically around the 81.5, and also the lows near the 78 level, okay? So in terms of looking at this particular counter, okay, first, what is a trend? You ask yourself this question, trend, okay? Yes, okay, trend, sideways, okay? Are there any fractals above that I can see? Okay, so you go in and look at this chart, okay? Are there any fractals? Yes, there seem to be a preponderance of at least 2 points over here near the 83.5 levels where you have fractals, okay? So if it doesn't break, okay, so the principle is if it doesn't break this low, which is the 76.5 low, okay, and maintain sideways and then it breaks out, okay? Let's say, for example, if this particular stock now, okay, what it does is, let me draw something for you. Okay, so let's analyze this together. Let's say it does a sideways move, okay? So basically, when it does a sideways move, can you see this this momentum? Okay, you have your eyes now have to see two things. You can see that this is continue to hit test some lows, but the momentum is moving up. So you have, even then you have a flat price, and you have this is actually a bullish divergence. Okay, so if you are in this particular stock and you're analyzing this stock on a daily chart, okay, what you're doing is this. Okay, this is signaling that possibility this market is going to bottom out. Okay, and these particular price points, okay, this particular price points right over here. Okay, let me just stop my mouse, go to mouse, okay. This particular price point here, okay, or even here, which is the 83.5, okay. So if this particular thing stays here and then breaks the 83.5, then, okay, it's basically telling me that, okay, that I could enter this particular stock to buy, okay. So this is the reading if you analyze this particular stock, okay. So I hope that helps. That's basically applying what we've learned today.
Okay.
Next question.
The next question is, could you look at MPI?
MPI. Of course, we can look at MPI. Malaysian Pacific Industries, okay. I used to love that as well. Okay, let's change. Okay, but let me clear drawings first. Okay, this is a daily chart. Okay, so what trend do you see currently? Okay, the most immediate trend currently. Okay, if you just use this, stop distracting and see. Okay, currently it seems to be on a short-term downtrend. Okay, it was an uptrend over here. Okay, now it's on what? Okay, so I guess suppose you're looking at tech stocks now. Tech stocks seem to be taking a correction right over here. Okay, so is there a profit-taking signal? Did it display a profit-taking signal? Okay, it did. Okay, there is a fractal displayed over here, which was broken on the 7th of April. Okay, so if you have bought this particular counter, then this basically, if you're looking at the fractal structure, is basically to say that in this particular move, there seems to be a downtrend already triggered at 35.5 and below. Okay, so that's the reading for MPI.
Okay, thank you so much, David. Could you look at the next company is Astro?
Okay, I already have this in mind, but never mind. Let me. Okay, actually, I have this somewhere. Where is it? Okay, hold on a second. Let me. I have it somewhere here. I have many watch lists, that's why. Hold on a second. Many watch lists. Okay, never mind. I have a shortcut to do that. Okay. Okay. That's true. Okay, so let's together analyze this together. Okay. When you get this type of charts, okay, this is a chart that will basically telling you this particular stock not easy to trade, because the charts have a lot of these flat tops and flat bottoms. Okay, but we are still able to recognize in terms of the fractals. Okay, it's just that this particular stock in terms of the movement is a pretty compared to a chart, let's say for example here. You can see the smoothness of the particular chart. Okay, here. Okay, I show you this. Okay, you see very difficult that there is tails and all that. They don't have this very flattish here, flattish there. And this is a where were we? Here. Okay. So there are a lot of these regions. But anyway, and let's look at the analysis of this. Look at the trend. Okay, so from the daily chart, what trend do you see? Okay, of course, here, starting beginning of 2022, it was a very nice uptrend. Okay, then there was this huge sell down. Okay, and currently, you basically will see some at this particular price point. Okay, you can see this huge sell down. Okay, this particular price point is very important. Okay, this particular bottom, which is if it breaks this, then it means maybe you may want to continue on the downtrend. So the 101 is a very, very important price point. If it breaks this, then you will then go into a sequence, a downtrend sequence. Okay, so here anything. Okay, so in terms of looking at this chart, okay, if you look at momentum, this is a high momentum. Okay, and every time there's a high momentum over here, okay, there's a possibility that it will revisit the high. okay, after it retraced, okay. So basically in terms of Elliott wave, we are talking, this is the third wave, goes into a fourth wave consolidation and continue on the fifth wave, okay. In the fifth wave, we'll take these prices above the wave 3 high, okay. So of course, tonight we can't do that, okay. Tonight, we already learned something, and that's a lot already, but that's Elliott wave theory. Feel free to go and Google Elliott wave theory and study more if you're not waiting for Bursa to organize a Elliott wave class, okay? But let's learn something over here. Can you see this? Okay, I want you to see this. Okay, can you see this particular, what do you call that? This prices were flat, okay, right over here. Prices were flat. Okay, so you see the divergence. There's divergence over here. Okay, and then market turn up. Okay, so always look out for that in terms of your momentum. After you identify the trend, look at the momentum and look at the setups. Okay, so back to you, Shane. Anything?
All right. Yeah, let's look at the next.
Okay.
Which is on your watch list.
Yes. Okay, so let's put out some. Okay, what is this? Okay, basically look like a slight incline on upwards, right? Okay, there was a okay, so if you were trading DNAX, okay, you would have a, where are the fractals? Okay, you can see the previous fractals over here. Let me bring up that array, horizontal array. Okay, so you had one here. Okay, so in terms that this particular point is the 108. Of course, you have an earlier one here as well. Okay, not much difference in terms of the price. Okay, but this was the earliest. The bigger one is over here. Okay, so there are a few fractals over here which has broken. So in terms of looking at this particular trend, all right, you can see over here, of course, it's already mildly on the upside. Okay, so let's look at this trigger. If it's there is a possibility, is there a turning point? Okay, so you must see here, there's no fractal here yet, there's no arrow here yet. It's, if there's an arrow here over here, then you may have to be a bit wary. Okay, either market is going into a, what do you call that, a consolidation. Okay, you could go on a sideways consolidation because this particular point here looks like a bit sideways. Okay, basically pausing to see any new things gonna to develop in this particular counter. Okay, so if I'm looking at this particular thing in terms of the Elliott wave, okay, and this will be what we call the Elliott wave 4. Okay, so okay, this is just bonus, didn't teach, but anyway, talk about it a bit since we're on this. Okay, so based on the Elliott wave principle, okay, so we have a, say, over here, we probably have a wave 1, followed by wave 2, followed wave 2, wave 3, and you may be looking at the end of the consolidation already, because over here, and then you'll be moving, okay, expected to move to wave 5. Okay, you can see the what do you call that, a bit of a if you look at the shorter term charts, you will see that there is a divergence over here. Okay, here is not so marked, it's not so obvious over here. Okay, but in terms of looking at that, you're looking at wave 4 consolidation, and you may see this particular stock, if it moves to wave 5, okay, it's managed to move, but this wave 4 is very deep. Okay, but the only worrying thing about this, if you analyze it on based on Elliott wave theory, is this wave is very deep in terms of the consolidation, the correction. So it when it moves so deeply, then the chance of the fifth wave to exit the wave 3 high, okay, is diminished. Okay, so I mean, that's the Elliott wave theory lah. But then if you are trading for the shorter term, then you don't worry about the longer wave. Okay, you look at the triggers and you buy and sell based on that. All right, so that's this particular stock for you.
Okay, sure. I think let's go to some general questions.
Yes.
Yeah, the questions by Kian Liu is that the slide of hibiscus chart was using line chart. The fractal would be slightly different if you use candlestick chart, for example. So yes, please, advise us now which one is better. Okay. I noticed that when you use candlestick, you reference the shadow, right?
Okay. Why I put a wave chart there, a line chart there. It's for people who are not familiar with looking at the wave. Okay, so when you look at the fractals, okay, the fractals is where it defines the highs and lows, which are very important. Okay, whereas the wave, that blue wave line, is based on the close. Right, so line charts are mainly charted based on the close of the day, right? So you will not define the highs and the lows. So when you want to look at the entry, okay, in terms of the system of entry, then you need to go into the fractals. Okay, you need to look at these highs and lows, right? Whereas let's say when you put this is a quick way for the beginners to look at trend now. Okay, if you already can see the trend, then you don't need to use this particular what you call that, line chart. Okay, basically I'm showing the line chart so that people can see it faster, okay, in terms of the trend. Okay, but your eyes are trained well enough to see into the candlestick, then you're okay. Okay, but in terms of entries, it needs to be defined by the fractals. All right, I hope that helps in the question.
Okay, now Tian Ming would like to ask, in the choppy market, using this system, is there a risk of getting multiple buy and sell signals in quick succession?
Okay, and quick successions depends on what charts lah. If you have 5 minutes, 15 minutes charts, possible, right? Because markets, when moving between trends, also have the consolidation markets. Okay, so how to avoid? Okay, and then that requires me to give you another technique. Okay, so normally how to avoid congestion is you need to filter. Okay, what to use to filter? Okay, I recommend it quickly, which I'm using here as well. You filter with what we call the alligator. Okay, so sideways now, right? We're saying that this particular stock is in sideways. Let me remove all the confusing drawings. Okay, sideways. Okay, so you have the alligator. Go in and display alligator. If you have fractals, you will have alligator in the platform. Even prices are inside these 3 lines, is inside, touching these 3 lines. Basically, it's not in a trend. It's in a sideways trend. Okay, so you use this to filter when the market's here, so that you will avoid all these false breakouts. Okay, over here, false breakout. Okay, so if he wants to really have a nice breakout, it needs to clearly break out this price. Okay, clearly break out this price, which is the 113. Okay, that's where the prices will be above the 3 lines. If it's marking around in these 3 lines, basically it's in congestion. So you could use the alligator, what do you call that, moving averages, to use to help to filter out the congestion. Okay, so I hope that helps you.
Okay, thanks so much, David. David Young would like to ask, how do you set a 534.5 indicator?
Okay, I hope your platform can show you Williams alligator, then easier to do AO. If not, then you have to go and put what do you call that? Okay, depend on your platform. But first you display your MACD. Okay, hold on a second. Display MACD. The fastest way is go and find a charting one that can show this one. Just kidding. Okay, go and put in your MACD. Where's my MACD?
Yep, I saw it just now.
You saw?
Moving average, convergence, divergence.
Okay. Okay, not bad. You know your stuff. Huh? Okay, so now what you need to do is you need to change the settings. Okay, go in and change your settings. Okay, so your inputs, you see, it's what do you call that? Oh, sorry, press the wrong. Okay, let me clear this bar. Okay, so you have the 1226 and you have the smoothing 9, right? So you just change this to 534.5. Okay, so that's what you do. Okay, so you get an approximation. It's not perfect approximation of the, you can see over here, compare the AO together with the modified MACD. You can see that basically it's almost the same, almost, but not exactly. Okay, so I because EMA, SMA, this one you need to change as well. So EMA calculates it a bit different. Okay, so go into the definition of the MACD I gave just now, and then you basically change the parameters.
Yeah, is there a reason these numbers are selected?
Because through his research, he found that the 534.5 is reflects. He backtested all that against the Elliott Wave, and he found that it reflects the fractal nature of the market. That's why 534.5. Not my invention. This one you have to go and thank Bill Williams.
Okay,
so I hope that's how you do it. 534.5. Change your parameters in MACD.
Okay, so when he did research, it was based in which years, the market?
In the 1980s, right? He was doing his research using the IBM mainframes.
Okay,
and
so far, when you use this set of parameters, it still works for now?
Yeah, it still works. Yeah, okay. It still works. Yeah. It depends on what you use it for. Yeah, it depends on what you use it for. I'm not using the AO to trigger a buy or sell for me. I'm not following like cross here, cross MACD, buy, cross below sell, right? Because each indicator has its specific usage. If you use it properly and you just don't simplistically use it, cross up, sell. I mean, you can but you may not have very consistent results. Okay, you need to use it wisely.
Okay, understand. Lai would like to ask which fractal function to choose in the trading view, given that there are so many choices of fractal inside trading view.
There are people who design fractals, but fractal is no ambiguity one where got so many different. There may be a lot of Elliott Wave tools, okay, but when you go in and you look at the Williams fractals, there's only one, okay, because basically it's counting the bars, so it's unambiguous one. You cannot say that I count 6 bars instead of 5 bars. The rules for fractals, displaying fractals, are straightforward and transparent. So it's unlike moving average. I can tweak. Fractals cannot tweak. You can only tweak the what? You can only tweak the time frame. Okay, you change the time frame, then the fractals will display differently for different time frames. Okay, but then even when it's displaying, say, an hourly chart, it will also display the daily fractals, because some of those hourly and the daily fractals will coincide.
Okay. For these two strategies that you just shared using fractals and also the momentum indicators like AO, Cheryl would like to ask, what is the win rate using this trading system?
Are you willing to test? That's a more relevant question. Okay, because the system will work differently for different instruments. Okay, but expect, because it's a trend following, expect it to have an edge. Okay, it will have an edge for you, and depends also on your profit taking, the risk reward ratio. So there are a few parameters, right? So it's very I won't simplistically answer this question in terms of depends on what you applied on. Okay, what time frame you applied on as well, right? So my suggestion, my proposal to you is backtest. Okay, so in terms of never take any indicator and just tomorrow use already. It never test, you use already. You don't know how to use, or you're not familiar to you use it. Okay, but always backtest. So let's say, for example, you want to use it on stocks, or you want to use it on your portfolio of stocks. Okay, take the chart and you backtest. Go back what do you call that, into the history. Okay, and test it. You can manual backtest, or you can use some rule-based, you can program it to test as well if you know how to do programming. Okay, but I would suggest you to backtest to see what's your win rate. Okay, not only win rate is important in terms of money management, it's not percentage of win. Okay, basically, even I trade systems. I trade systems that can be like 30% right only. Okay, that means out of 10 trades I lose 7 trades one. Okay, but my 3 trades are very fat one. Okay, so those you need to tweak those parameters as well. So if that particular what do you call that, indicator, or if that you want to implement, okay, you need to backtest it and to see what are the other parameters, win-loss ratio, profit ratio. Those are the important things as well, not only the win rate. Okay, so be careful on just measuring a system on win rate. Okay, but I suggest that you go and test it out and try. Okay. So,
okay. Here is a feedback from one of the practitioners of using Fractal. I tried Fractals in FCPO and I experienced it. It may rebound back before breakout succeeded. I have problem with this rebound because it touches my stop loss easily. Appreciate if you can share your opinion how to improve my trades. So that's by Kian Liu.
Can you FCPO or this is equity? maybe I should you should join some equity classes that okay. So the thing is the breakouts. Okay, so sometimes you put stop loss. You can say, oh, frustrating. This stop loss. I put every time the market fellas seem to know where my stop loss is. Now the thing about this okay, excuse me, all the equity players are just talking a bit of FCPO. Lately in the last 1 year, it's not easy because volatility has increased. Okay, so if you're still using the same old stops as you used to use 1.5 years ago, I'm sorry, you're going to be whacked left, right, and center lah. So if you're experiencing that, okay, you may have to relook, okay, either your time frame that you're trading, okay, or your stop loss levels. Your stop loss levels need to what do you call that? Take into consideration the other indicator called ATR, okay, the average true range, okay, because the average true range for CPO is very large now, okay. So in terms of some of the guidelines, like if you're looking at stops, it should be within like 2 times ATR. So for that particular time frame or period you're looking at, it's the 2 times ATR stop loss viable for you. If not, you tend to be stopped out quite often. Okay, so that may be just frustration. Okay, so one thing is use the alligator to sort of try to get you out of all those false breakout. Okay, number 2 is you need to readjust your stop loss to match the market volatility. Okay, so that's my best
all right,
recommendation for you.
Thank you so much, David. Michelle would like to ask, can you share with us how do you set up your screener? Normally, what criteria do you put in?
Hey, the first question to ask yourself is what types of stocks you want to screen. Okay, screener got so many types. Okay, so are you a day trader or are you a what do you call that, a position trader? Okay, so do you combine fundamental analysis and technicals? Okay, some people look at fundamentals because they are investors, right? So they look at fundamentals and then they go into look at the timing. Okay, so what I suggest to you is if you're already using a screener to look at the valuation of a stock, okay, whether it's a good value, right, or undervalue, okay, or even overvalue, right? So look at those things that you're already doing the screening, okay, and then look into these techniques that you see today to use it as a timing to get in or to get out. Okay, so in terms of market screener, it will actually varies depending on what you're trading. So if I'm the day trader, then I'm looking for volatility. Okay, I'm looking for ATR. Okay, so those are my more important things. So if you're trading long term, then you won't be looking at that. Okay, but in terms of screener, my screener, some people don't like because my screener talks about I want volume, I want volatility, I want average volume 3 months above a certain amount. So if you're trading some stocks, it may not qualify that. Okay, so you may want to tweak because that depends on what you want to put into your screener. Okay, so if you have a conservative investor, you may really have a very, very different type of screener in terms of the criteria you put. Okay, but always I think the most important things is volume and volatility. Volatility means that this particular stock can move on. Don't buy a stock that doesn't move. Okay, and then volume so that it can get in and out easily. Okay, so you have volume and liquidity. Basically, that's liquidity. Those are my two very important screening criteria. Okay, I hope that helps. Okay, I know it's quite general to address that because you need to tailor down to that particular person's time frame and what he's trading. Okay, I'm sorry, I may not be able to give you a very specific answer to that. Back to you, Shane.
All right. Yeah, so that shall conclude our question and answer session with David. So thank you so much, David, for sharing with us the high probability trading strategies for catching early stock trends and doing chart demo with us on how we can apply this strategy on live charts. Yeah. So thank you so much. I hope that all of us here have walked away with enormous value from today's webinar. So yes, let me stop the recording and tell you more about our next webinar. So next webinar is happening on the next Monday. It is titled, in Malay, which is Membongkarkan Mitos Dalam Dunia Saham. So we will look into some of the stock market myth like window dressing or sell in May and go away. Will this hold true in May? So we will be addressing all these market myths in the next webinar that's happening on 18 April 2022. So I've just given you all the link here. So you may register for this session, which will be conducted in BM. All right. So thank you so much, David, for doing this session. So ladies and gentlemen, you just heard from the managing partner of Xmodeus Trading Group PLT, which is David Low. All right. Thank you, everybody. Have a great rest of the day. Bye.
Good night. Bye-bye.
Thanks, David.